Ever wondered if your everyday spending could actually be building your wealth? What if those small, seemingly insignificant purchases, like your morning coffee or that impulse snack, could be transformed into a powerful engine for your financial future? For many, the idea of investing feels intimidating, reserved for Wall Street wizards and those with large sums of disposable income. But what if I told you there's a platform designed to demystify investing, making it accessible even with just a few cents? We're talking about Acorns, the micro-investing app that's revolutionized how people approach their financial goals. In this deep dive, we're going to explore the best investment strategies with Acorns, unpacking how you can harness its unique features to grow your money, whether you're a seasoned investor or just starting out. We'll cover everything from their signature roundups to building diversified portfolios, saving for retirement, and even investing for your children's future. By the end of this, you'll have a clear roadmap to making your spare change work harder for you than ever before. First, let's understand the core philosophy behind Acorns, micro-investing. This concept is all about breaking down the barriers to entry by allowing you to invest small amounts of money regularly. It's based on the powerful principle of dollar-cost averaging, which means investing a fixed amount of money at regular intervals, regardless of market fluctuations. This strategy helps to reduce risk over time, as you buy more shares when prices are low and fewer when prices are high, ultimately averaging out your purchase price. Acorns makes this incredibly easy with its flagship feature, roundups. Imagine this: you buy a coffee for $3.75. Acorns automatically rounds up that purchase to the nearest dollar, in this case, $4, and invests that extra 25 cents into your portfolio. It might seem like a negligible amount, but these small increments, accumulated over time, can snowball into substantial savings thanks to the magic of compound interest. This is one of the most passive yet effective ways to integrate investing into your daily life without even feeling it. But Acorns is more than just roundups. They offer a range of account types and portfolio options designed to cater to various financial goals and risk tolerances. When you sign up for Acorns, you'll answer a few questions about your financial situation, income, age, time horizon for investing, and your comfort level with risk. Based on your responses, Acorns recommends one of their expert-built, diversified portfolios. These portfolios are composed of exchange-traded funds, or ETFs, which are essentially baskets of various stocks and bonds. This inherent diversification is a cornerstone of smart investing, as it helps to spread out your risk and prevent all your eggs from being in one basket. Let's break down these portfolio options and how to best utilize them. Acorns typically offers 5 core portfolios, ranging from conservative to aggressive. The conservative portfolio is ideal for those with a low risk tolerance or a shorter investment horizon. It's heavily weighted towards bonds, which are generally less volatile than stocks, offering more stability. While the growth potential might be lower, it provides a safer haven for your money, making it suitable if you need access to your funds in the short to medium term, perhaps for a down payment on a house within a few years. Moving up the spectrum, the moderately conservative, moderate, and moderately aggressive portfolios strike different balances between stocks and bonds. The moderately conservative portfolio will have a higher allocation to bonds than stocks, while the moderately aggressive will lean more heavily into stocks. These are great for individuals who want a balance of growth and stability, perhaps for medium-term goals like saving for a child's education or a new car in 5 to 10 years. Finally, the aggressive portfolio is designed for investors with a high risk tolerance and a long-term horizon, typically 10 years or more. This portfolio is predominantly composed of stock-based ETFs, including exposure to large domestic companies, international stocks, and mid- and small-cap companies. The logic here is that over longer periods, the stock market historically tends to outperform bonds, offering greater potential for significant wealth accumulation. This is the go-to strategy for retirement planning, especially if you're younger and have several decades for your money to grow and recover from any market downturns. Choosing the right portfolio isn't a set-it-and-forget-it decision forever. As your life circumstances change, so too might your risk tolerance and financial goals. Acorns makes it easy to adjust your portfolio over time. For example, as you approach retirement, you might want to shift from an aggressive portfolio to a more conservative one to protect your accumulated wealth. This process is called rebalancing, and Acorns can even do it automatically for you, ensuring your portfolio stays aligned with your chosen allocation. Beyond the core investing account, Acorns offers specialized accounts to help you target specific financial milestones. Acorns Later is your dedicated retirement account. This allows you to set up and contribute to a traditional, Roth, or SEP IRA directly within the app. IRAs offer significant tax advantages, which can supercharge your retirement savings. The beauty of Acorns Later is that it simplifies an often complex aspect of financial planning, making retirement investing as easy as setting up recurring contributions. Plus, with higher subscription tiers, Acorns even offers a match on new IRA contributions during your first year, which is essentially free money for your retirement. For parents or those looking to secure the financial future of loved ones, Acorns Early is a game changer. This feature allows you to open a UTMA/UGMA investment account for children. These are custodial accounts where you manage the investments on behalf of a minor, and the assets are eventually transferred to them when they reach adulthood. It's an incredible way to get a head start on college savings or simply build a nest egg for a child's future, leveraging the power of compound interest from an early age. Acorns also offers Acorns Checking, a banking account that integrates seamlessly with your investing. With Acorns Checking, your round UPS can be invested in real time, meaning that spare change is immediately put to work. It also boasts no overdraft fees, access to a vast network of fee-free ATMs, and the ability to split your paycheck automatically to direct a portion into your investment accounts. This invest while you spend approach truly embeds saving and investing into your daily financial habits. With that said, thanks for watching, and until next time.